Okay, section 3.1, review questions. So, a business transaction is a financial event. It has to have some financial consequences. So, you can have, you can hire someone, you can fire someone, but if there's no financial consequence, there's going to be no change in the financial position of the company. So therefore, it's not a business transaction, okay? But if there is some kind of financial implication for the business, it is a business transaction.
Does it always have to affect cash, or can it affect like other
No,
stuff?
yeah, definitely. So not always is it going to affect cash. In fact, I mean, the majority of the time it will, for most businesses. I'm trying to erase this, but there we go. All right.
Can you use the rainbow color?
The rainbow coloring?
Of all colors, there's a rainbow option.
Okay.
Shoot that.
Oh.
No, I thought it was like a rainbow. Oh, okay.
Yeah, I don't think so.
I'm disappointed.
No.
I thought there was all.
Okay, so yeah, it's not. Sorry. All right, anyhow.
Is this recording?
Yes, it is. Okay, so number 2, give an example of transactions other than the ones noted in the section. So what example they've given here? A new desk is purchased and paid for in cash. Can anyone else think of an example of a business transaction? Anything?
Office supplies?
Okay, the purchase of office supplies is a business transaction. Okay, anything like that when a company buys something. Okay, number 3, give an example of an event in a business other than the one noted in the section that is not a transaction. Yeah, Philip.
The owner has some dog soup.
Dog's soup?
Yes.
What?
What is that?
That's just weird. I don't know what he means. And I'm not going to explore it. So the owner examines some new equipment being demonstrated by a salesperson. Okay? So if you just look at something, it's not a business transaction. Okay?
Like
The only time it actually becomes a transaction is if after examining the equipment he decides to buy it. And if there's a decision to buy and information an invoice is drawn up for the purchase of that equipment, then it is a business transaction. Okay, but cash doesn't necessarily trade hands at that point, but it does still become a business transaction, even though cash hasn't changed hands, because there's an intent to purchase. Okay, so once there's an intent to purchase and a form has drawn up to show proof of purchase, then a transaction has been completed, even though cash hasn't changed hands yet. So that's an important consideration. Okay, so number 4, what is a source document? Okay, so a source document is the original record of a transaction that provides the accounting department with the information it needs related to the transaction. So what can we take from that? So it is the original record. Okay, so we can see receipts, and the second question is examples of source documents: hydro bills, telephone bills, check copies, store receipts, cash register tapes, and credit card slips. So most of us know what a hydro bill is. Okay, that's a bill for utilities. Telephone bills, I mean, hopefully most of us understand what that is. Check copy. Now, a check copy is a source document. It's not a check. What's the difference between a check copy and a check?
A check is something that you give to a person to get their money.
Mm-hmm.
And I think underneath it, there's actually it bleeds into it, like whatever you write.
Yep.
And then you have to give it to, I think, the bank or something.
Well, no, you don't have to give it to the bank. It's for your purposes, your record of the check. Most banks nowadays, they'll scan all the checks, and so when you look up, does anyone do electronic banking here? They have access to their own bank account electronically. Okay, so when you go online, and if you do happen to write a check from your account, and you can look at all your transactions that you've had on your account, and you can click on any of those transactions, and if it happens to be a check, it will actually show you a picture of that check. Okay, so check copies aren't necessarily all that widely used anymore personally, but definitely in business they are. Okay, and the reason they are is so that they have some physical source document, some way of recording the fact that that transaction has been completed, and then they can file it away so that if there's ever a question, such as, say, the business says, oh, hey, you didn't send us that check. We never got it. What happened? Then we have a record of us actually writing it and saying, okay, yeah, we wrote it on this day. We must have sent it out in the mail. It must still be on its way, or it got lost in the mail. Maybe we'll have to draw up another one and cancel this one. So there's a record of, the check number. There's a record of how much it was for and who it was sent to. Okay? So a check copy is going to be the source document. The actual check itself is not a good source document. Why wouldn't it be a good source document? The check itself. So say, for example, we bought something from Office Depot. We sent them a check. They invoiced us. Okay, so meaning they sent us a bill. They delivered us some paper and some office supplies. So they sent us a bill. We wrote a check for the bill and mailed it to them. Okay? Now, Office Depot wants to have some kind of source document to record the fact that they received payment. Okay? Would they hold on to that check as a source document for the receipt of payment?
No.
Why wouldn't they hold on to the check?
Oh, cash.
Okay, yeah, because a check is only of value to us as cash. It's like me filing away cash. Well, it's not doing anything for me in the filing cabinet, right? It's not earning any interest. It's not helping me generate income for my company. It's not a good source document. It's better as cash, right? And a check is virtually cash. So the faster I can get it to the bank and have it convert it into cash and be generating income in my bank account, the better. Okay, so a check is not a good source document. However, a check copy is. Okay, store receipts. So anytime, say you're working as a runner or a receptionist or something for a business, and they ask you to go out and buy, muffins and coffee at Tim Hortons for everyone in the office. Okay, they'll say, okay, go buy it. Here's some money from our petty cash, and we'll talk about petty cash a little later. But here's some money. Can you go out and buy, a dozen variety donuts and coffee for everyone in the office? And then you come back, and what do they ask you for?
Change.
Well, they ask you for the receipt and
the
change.
Oh, okay.
Okay, so yeah, but they ask you,
For
yeah,
coffees.
for and the coffee and the donuts.
I took a copy before.
But so a store receipt is a good source document because it's printed off by a third party. It's printed off by Tim Hortons. It is, a valid. It should have the date on it. It should have the amount that you spent, and so it's a legitimate document to show this is what I spent my money on. Okay. Cash register tapes. Do you guys know what that is? What's a cash register tape? Has anybody ever worked in a store before where they worked on cash? No. Okay, so at the end of a day, a cash register tape is generated from a point of sale terminal, or what we call a cash register, another name for a cash register. Okay, so the cash register, most of them are computerized these days, and they keep a running total of all your debit sales, all your credit sales, all your cash sales, and any of the tax that's collected. Okay, and so at the end of the day, you press a button, and then till flows out all these, like a summary, if you will, of all these sales that were completed during the day, so that they know, okay, this is how much cash should be in the till, this is how much we generated in sales, and this is what type of sales they were, okay? So that's what a cash register tape is, okay? So that provides a source document for any businesses that want to, record sales happening. Well, why would we want to do that? Obviously, that's generating income for our business. We want to record any sales that are happening because we know that improves our equity in our business, right? Credit card slips. Again, if you work in a credit card slips have kind of gone by the wayside. I mean, they're you still have the odd business that will accept a credit card, and they'll do the whole run it over a machine. Do you remember those machines that used to take an imprint with your credit card? Most businesses in Canada, I would think, have switched over to electronic, reading of debit and credit cards. Okay.
I was just thinking about that. Isn't it when there's no power that they take those things out and start to do it?
Yeah, I mean, I guess. I don't know how many. I think a lot of businesses would just shut down if there was no power, right? But
Swipe.
yeah. So anyways, that's what they're referring to here with credit card slips. So, I mean, we'll talk about it, but it's not really in use much anymore. And then the source documents are filed for future reference. So if there's any questions as to the validity of a transaction, if, say, an auditor comes in and says, hey, did these sales really happen? Okay, yeah, they happened. Here's my file. Here's all the sales I had. Okay? So here's my proof that these sales actually happened. All right? So number 5, give examples. We did that. Number 6, what happens to source documents? And I just said that. We file them for future reference. Okay? And the last one is state and explain the objectivity principle. Okay? So the objectivity principle states that accounting will be recorded on the basis of objective evidence. Okay? So not solely on, say, opinions or beliefs or handshakes or verbal agreements. Okay? Accounting is based on objective evidence, meaning you actually have some physical evidence, meaning a source document of some kind. Yeah.
Is it because we'd make an understatement or an overstatement?
You could make an understatement, you could make an overstatement, you could lie, and there would be no backup for it, right? You could say, oh yeah, I made, $1 million in sales, yeah, come invest with me, and that's just all we have to go on is your word, okay? So that's why we require objective evidence, okay? That transactions will be recorded on fact, not personal opinion or feelings. Okay? Yeah, I feel, like my bank balance should be a little bit higher. I don't know. The best objective evidence for the cost of telephone use is the bill from the telephone company, meaning I'm not going to estimate how many long-distance phone calls I made. Okay, I'm not going to guess and write it in my balance sheet, what my accounts payable is. So it's objective evidence, okay, and it needs to be because we're going to have auditors potentially looking at our books if they feel the need to.